Good morning. Thank you for joining us today at the Innovative Business event. My name is Nagdal. I'm the Community Engagement Specialist here at Vibe Credit Union and a proud member of the Greater West Bloomfield Chamber of Commerce. So thank you for joining us today. I'd like to share my screen with you to talk about how to improve your credit score. It's such a vital piece of our adult life, and we would love to help you how to improve, pitfalls to avoid, things to look out for when it comes to your credit score and your credit report. So in doing so, I'd like to go ahead and share with you my screen so that you can see some of the vital aspects of your credit report and so forth. So go ahead and take you there right now. Okay, so I hope that you can see that again, I'm from Vibe Credit Union. We are a Michigan-based credit union formed in Michigan for over 80 some years, and we have 16 locations in the greater Metro Detroit area. Our headquarters is in Novi, and we have 16 branches, like I said, in Oakland County and Macomb counties. So without further ado, this is what we'll be talking about today. Again, your credit report, what it looks like, what credit bureaus are represented in pulling up your report, what is your credit score, ways to improve it, and how your credit score impacts your financial well-being. So what is a credit report? What's on a credit report? A credit report will record your individual credit history from the time that you first establish history with a financial institution or a health insurance company or an auto insurance company. It includes your personal information, public records, credit history with credit cards and loans and so forth, credit information, including payment history, and trade lines are like individual lines that describe each of your trades with some of these institutions and companies. Trade lines can differ between a term or a revolving. A term is like a car loan, for 24 months, 36 months, or 5-year term, or a revolving debt, which is like a credit card. So every time you use it and then you pay it off, then that credit line becomes available again. So that's a revolving debt. And then it also increased credit inquiries from other companies, such as whenever you go to apply for a loan or a credit card. And those will also show up there on your credit report. The 3 credit bureaus in the United States include Equifax, TransUnion, and Experian. And they are, again, 3 independent federal regulated companies that track your credit history. Their scores will vary between 0 and 50 points between each other, but again, one doesn't necessarily supersede the other, but there are 3 separate entities within the credit bureaus of the United States. So again, they're federal regulated. They're not federal government institutions, but they are regulated. And you as a consumer are entitled to an annual credit report. You can order 1 free credit report through annualcreditreport.com, Credit Karma, or freecreditreport.com. As a consumer, again, you have the right to get to request 1 free credit report per year per company listed there. Now, who else is looking at your credit report besides yourself? They include, like I mentioned earlier, insurance companies, anybody who's asking for your social security number, basically. And then why are they looking? They are looking to help them determine their risk by lending money to you. So insurance premiums, obviously, if the higher your credit score and the better history you have of paying things on time, the better chance you'll have at a tier 1, a higher discounted insurance premium. Rental agreements and also utilities. They also pull your credit report to ensure that you have a good payment history, so that they're not risking too much by renting to you or by providing you utility services. Your employment, obviously, they ask for your social security number and pulling your credit to, again, ensure that your creditworthiness is part of their hiring process. And then colleges and universities as well. So what is a credit score? It's a number that ranges between 300 and 850. And again, it tracks your success in managing money. And lenders look to this to, again, evaluate their risk before they lend money to you. And there are 3 C's of credit to look out for: capacity, capital, collateral, and character. Capacity talks about the amount of credit that you use at any given time based on your total amount available. So for example, if you have a $10,000 credit limit, your capacity would be that full $10,000. But then if you use $2,000 to $3,000 of it, then obviously that is 20 or 30% of your full capacity. So, and then collateral obviously is, for example, your car loan. So your car loan would be the collateral would be the vehicle itself. And so these 3 C's of credit help the lender to evaluate their risk to lend to you. So in terms of the credit score breakdown, what does it consist of? Typically, based on research in previous years, basically 35% of the credit score consists of the highest. Again, the payment history is 35% of your payment history and your history of paying on time. The minimum on time is the #1 thing that a creditor will look for to make sure that you are a high candidate. 30% is what's owed. So again, that's your capacity. So again, you want to try to stay below a certain percentage that's owed at any given time. The length of credit history, again, how long you've been with somebody. And so the longer you are with someone, a given financial institution or a loan or a credit card, the better that looks for your credit history with that company. And then the last 2 remaining 10% really just have to do with the types of credit, whether it be a credit card or an auto loan or anything more substantial, and then new credit, any new inquiries. So those 2 make up the remaining percentage that make up your credit score. So these next slides just really talk about more of examples of how you could save by having a higher score versus having a more challenged score. So for example, on this one, if you're applying for an auto loan for a $25,000 vehicle at a 60-month term, if you were rated in the tier, obviously in the tier 1 or 2 higher at 720 and over score, obviously you would be able to secure a lower interest rate as opposed to those at the lower mid 500 to 600 score. That would give you a huge substantial savings overall on your monthly payment and then your overall interest savings because of your higher rating. So, and then again, same thing, if you were to buy a more substantial piece of equity, such as a home at a purchase price of $200,000 for a 30-year fixed mortgage at $160,000. So again, that's assuming then you're able to put down that difference in that down payment. So again, if your credit is in the 800s, obviously your interest rate would be much lower than that of the mid-6 credit score, and thus providing you a substantial monthly payment savings and overall interest savings for that 30 years remaining on that loan. So again, a great reason to keep a tab on your credit report and ways to avoid pitfalls such as having too many credit cards open at the same time, or overutilizing and maxing out your credit cards would definitely not help you in securing a good credit score. So again, I do appreciate your time with us today. My name is Nauk Do. I'm from Vibe Credit Union, Community Engagement Specialist, and we do appreciate you being part of our chamber. We do encourage, if you have any questions, to please reach out to me. So again, my name is Nauk, and I'm from Vibe Credit Union. Our website is vibecreditunion.com, or you can call our number of 248-735-9500 if we can help you in any way. Thank you so much. Have a great day.